Dear viewers, crypto investors continue to be put to the test. Everyone is expecting a breakout, most of course to the upside, and this week will definitely bring new momentum. Whether that will be enough for a breakout, of course, remains to be seen. The fact is, though, that this week is packed with events, and there's absolutely no sign of a summer lull right now. We recently saw a tech sell-off in Asia. We're in the midst of AI euphoria. We're expecting some economic data and, of course, earnings reports from some of the MAG 7. In the next few minutes, I'll be discussing how all of this will affect Bitcoin, altcoins, and the markets with Oliver Michel from Tokentus. It's great to have you here, Oliver.
Hello.
We're right in the middle of summer, but there's absolutely no sign of the summer blues. That is to say, we've seen that, as we've discussed many times in this interview. Everything hinges on the price of oil, which is, of course, linked to inflation. All of this stems from the conflict in the Middle East, and things have calmed down a bit there, at least for now. Nevertheless, as just mentioned, there's still quite a bit on the agenda this week, especially on the corporate front and regarding the US economy. What are you expecting?
Yeah, Johanna, as long as the Magnificent Seven are still in their earnings season, volatility is on the horizon. We already predicted that last week. On top of that, of course, there's the FOMC meeting this week. Will Kevin Warsh be hawkish? He doesn't even have to raise interest rates to essentially send a signal to the market. So all of that is causing some movement. Of course, that also has an impact on our Bitcoin. There's no question about it. We had two hopes for Bitcoin last week. First, we wanted it to test the $66,000 resistance level. It did that, it even broke through it. And the second hope was that it would perform a sort of back test into which we actually want to invest the second 50%. That's still available. And this back test, it's already underway. It might take a few more days, and we'll be buying into the dip. And after that, as far as I'm concerned, it can really take off.
That means the remaining 50% of the capital, the portion you still want to invest, is still on the sidelines, so to speak, and we're keeping an eye on the whole situation and will be the first to announce it, as is always the case here at Crypto Insights, of course. Let's go over the FOMC meeting a bit more. We expect, or rather market expectations regarding the Federal Reserve, to remain largely unchanged for now. But in these admittedly very volatile times, we've naturally seen rising oil prices, which play a not insignificant role in inflation, even if they've now come down somewhat. Some market analysts are talking about a surprise interest rate hike. You just said that he doesn't have to raise interest rates at all. There are other ways to stimulate the economy. I assume you're referring to the subsequent press conference, at which Kevin Warsh is actually considered more of a, reserved, taciturn head of the Federal Reserve.
We'll see on Wednesday. We have the FOMC meeting on Wednesday, followed by the press conference. The market isn't expecting any changes right now. Everything stays the same. But what's interesting is last week it was still at 16%, and now it's at 37%. So there's definitely a growing sense that an interest rate hike is coming, and the market is factoring in one for September and a second one for December. And the rate cut that was still listed here last week has completely disappeared. So in that sense, things are definitely moving in the direction you described. Inflation is rising because of the oil price. We have to fight this inflation. You do that by raising interest rates. And I'm assuming that this will definitely be discussed during the press conference. Donald Trump spoke out last night aboard Air Force One and has already said, and indirectly put pressure on this FOMC committee, that the US should actually be the country with the lowest interest rates. And what he did with Jerome Powell, he's obviously doing the same thing with Kevin Warsh now. Build up pressure to get the right decision made in the right direction, but I'm assuming that Kevin Warsh is man enough to stand up to it and make sound, smart decisions with his team.
Well, given the pressure being exerted on Powell, Kevin Warsh naturally knew what was in store for him and what course of action he would take. On Wednesday, that will definitely be on the agenda, as will the earnings reports from most of the Magnificent Seven, which are still very much in the spotlight and also represent the whole AI hype. We've already seen a few sets of numbers. For example, with Tesla, market participants were dissatisfied with the earnings and the stock fell accordingly. Alphabet's numbers were good, but the expenses and future cost projections related to AI were quite high, so the stock traded more or less flat. Intel, on the other hand, impressed with its numbers last week. And this week, we still have a few heavyweights on the docket. That means Microsoft and Meta tomorrow, and Apple and Amazon on Thursday. As we just discussed, Microsoft and Apple are the two companies listed on the Dow Jones. The rest are all Nasdaq listed, and their investors will certainly be looking closely at just how far the planned spending on AI goes. We are currently seeing a bit of a struggle and some stress in the tech sector, at least when you look at the situation in Asia. In addition, during this summer week, we'll also have some economic data that could, of course, be decisive for the Federal Reserve and its future course of action.
Yes, definitely. So we have two very important data points coming out. On Thursday, the gross domestic product, the GDP for Q2, which is the first read. So that's the first indicator we can use to gauge how well the second quarter went. Just to recap, in the first quarter we had 2.1% and the forecast is for 2.3%. So an increase in gross domestic product is expected, and it would of course be disastrous if that didn't happen. The market would definitely react immediately to that. On the other hand, we have the PCE inflation data, which I describe as a slightly more flexible version of the CPI, so to speak. And that's also coming out on Thursday at virtually the same time. We had 4 ones previously, so last month in May. The forecast for June is now 3.7, similar to the CPI and the producer price index, where we saw a downward trend, and that's visible here as well. That's what's expected. It had better happen, because if it doesn't, we'll have a problem on that front. The market will pick up on that immediately. And the same applies, of course, to the core index, excluding food and energy. 3 or 4 are expected, 3, and as I already said, they'd better show up. So from that perspective, it's going to be a crazy week with the FOMC, the quarterly earnings reports, GDP, and PCE. So aside from the jobs data, we've got almost everything covered.
It's been a jam-packed week, which we'll of course be covering here at Crypto Insights on our channel, where we'll publish the data, and of course you'll also discuss the implications for Bitcoin and altcoins. That said, it's summertime, which means vacation season for us too. We won't be doing an interview next Tuesday. But I'm doing my very best to keep track of everything by the pool, maybe with a drink. We do have a few things going on right now that, well, don't exactly make you want to keep your feet in the pool, but we should still treat ourselves to this once in a while. We still have the conflict in the US, or with the US in the Middle East, though the US government shutdown is scheduled for the end of September, on September 30th. If no solution is found for the fiscal year by then, we'll be back to putting everything on hold, no spending, etc., etc. And if we recall the last shutdown, I certainly hope this one isn't made even worse by another one, especially with the midterms coming up in early November. That means we have to position ourselves over the next 3 months in such a way that we actually have the citizens on our side. And as you just said, the election campaign has already begun. But amid all this chaos, this flood of information, let's also take a look at how the markets are reacting, since they're still trading within their range. We'll start with the Dow Jones again and stick to our approach of looking at the Dow, then the Nasdaq, the DXY, Bitcoin and altcoins, because in your opinion, these factors influence one another in sequence. How's the Dow Jones doing? How has it performed?
Yes, Johanna, that's exactly the right order. The Dow is in the lead, it's pulling ahead. That's why we're listing it first. The Nasdaq is next because of its ties to the tech sector and our cryptocurrencies, and the DXY is last because ultimately, when it falls, it gives Bitcoin and the altcoins some breathing room. That's why we have this order, and we're starting with the Dow. I already said last week that the Dow is just correcting because it's more concentrated and has fewer tech stocks with a smaller range of fluctuation. We're currently seeing corrections here, always in the range of 3%. Here too, we're currently at 3%. And it's actually a nice, clean, neat correction. Man, you could also say here that it's a bear flag, and in principle it'll continue moving upward toward the target range of 54,000. But I can only repeat myself, it's the final leg the final stretch toward that goal. And the question is, when will this start? It's not a question of whether it will continue, as with the Nasdaq, but simply a matter of when. Well, to transition to the Nasdaq, yesterday, let's just take yesterday, Monday, the Dow was up 0.51%. It was actually a really, really good day. You can see it here on the right, a nice rebound. Meanwhile, the Nasdaq was down 0.32%. The Nasdaq was down by as much as minus 1.5, 1.6 and 1.7%. That had something to do with in China, there are apparently new machines for chip manufacturing now. Chip manufacturing also involves the memory chips for AI. And that ultimately caused 6 or 7 memory stocks in the US to plummet. Because these memory stocks too have been a major part of the AI rally. So all of this is built on very thin ice, and the tiniest ripple from the Far East ultimately causes things in the US to start wobbling, and then an index like the Nasdaq, unlike the Dow, wobbles much more severely, and we notice that accordingly. So from that perspective, the Dow is leading the way. It's relatively stable, it's relatively tight, it's relatively clearly structured, and it's heading straight for the finish line.
Then let's take a look at the Nasdaq as well. You just mentioned that the Chinese, of course, want to be more independent, especially when it comes to chip production and AI. And they've just pulled off a massive IPO that was oversubscribed 222 times. China has launched a chip manufacturer on the market, and that's obviously another step in that direction toward reducing that dependence. That's naturally reflected in the volatility on the Nasdaq, just like all the AI companies that are now gearing up to report their quarterly earnings. You're assuming that the Nasdaq will continue to be more volatile.
Well, we've said it once before. The Magnificent Seven are all listed on the Nasdaq and all in the S&P.
Yes.
That means that as long as the numbers aren't clear, there will be uncertainty and the market will fluctuate. And since the Nasdaq is very tech-heavy, and tech-heavy ultimately means very risk-prone, well, naturally you look at the statements regarding interest rates. And that's why, as long as we haven't gotten through this earnings season yet, it's going to remain volatile. I already mentioned that at the beginning, and that means that if we look at the Nasdaq here, we've been in this sideways trend since the beginning of June, so for just under 2 months now. And we've also said several times that the Nasdaq won't just touch the lower boundary, which it did once, but I also said last Tuesday that it will likely go below that lower boundary, not by much, but it will go below it. Here's how it generally works. You enter the range, and when you break out at the bottom, you enter this phase before heading back up. That is the classic accumulation phase. And you can see that in the RSI as well. So, the one where the strength is declining, we're on a downward trend, and we're comparable to regions like here, and there too. So basically, these are typical corrections we've seen along the way. This could be over in a week or two, but basically, with earnings season last week and this week, we also need to keep Nvidia on our radar. Their results come out at the end of August. And as long as earnings season is in full swing, things will remain volatile, and that FOMC interest rate circus will have a major impact on the situation. We're just keeping an eye on it because that's where we expect the rotation capital for our cryptos to come from. So those investors who jumped on the AI bandwagon, the ones who made a killing on AI stocks, will at a certain point, when the upside gets tighter and tighter, say, okay, better take some profits. And they'll have to do something with those profits. And with those profits, they then head straight into the crypto market because, unfortunately, there are a lot of retail investors there who are selling their coins at bargain prices. And of course, that's where the big pros like to strike. So from that perspective, we're also on the right track here. Everything's going according to plan. This is the final correction before the market starts its climb toward the ultimate target, which will be between 30,000 and 33,000 points, maybe even 34,000. And then personally, I expect the rollover, the onset of the rollover. a rollover, and I'm repeating myself here, doesn't mean that the market will crash immediately. Rather, it will go down, then there will be a stronger correction back up, and then it will go down again, and that will be the final decline.
The main thing is that it moves out of the range again.
Out again.
But before we take a look at the buyers and sellers in the cryptocurrency market, specifically who is positioning themselves where during this bottoming out phase, let's take another look at the strength of the dollar and accordingly the DXY, that is the dollar's performance against the major world currencies. Of course, we've seen, especially with the conflict in the Middle East and the fluctuations in oil prices, that the dollar has changed significantly. We've seen that with this resurgence of shelling in the Middle East, the dollar has risen significantly, the oil price has risen significantly, and of course so has the DXY. It has pulled back a bit now, but at the moment it looks as though the DXY hasn't yet capitalized on this pullback, it has merely halted it.
I mentioned it on my channel. My daily routine is to check the oil price first thing. If the price of oil rises sharply, then I know I don't even have to look for it. There'll probably be another crash or something. The Strait of Hormuz, they were firing at each other. And when, like yesterday, Monday, the oil price drops massively by nearly 10%, then I know, oh, something good must have happened. And after that, after checking the oil price, I then look at the DXY next, because we need a falling DXY, which, as I said before, gives the cryptos some breathing room. Only if the DXY falls do cryptocurrencies have a chance. And you can see very clearly here how the DXY has risen, as you already mentioned, in the wake of this resurgence of the conflict over the past 2 weeks. And yeah, he ran into the top edge with that. Starting with last Friday.
Yes.
And yeah, and since yesterday, Monday, the whole thing has held up pretty well. It hasn't gone down, but at least we've seen it hold steady. So it hasn't gone any further beyond that purple zone, beyond that resistance zone. And I'd really like to see it now fall along with the oil price and basically start this downward move into this zone here, which would allow us to say, okay, the cryptos have a chance to gain ground before, and here I can only repeat myself, at a certain point, let's not kid ourselves, the dollar will rise again relative to the other currencies. But that's a different story anyway.
Step by step.
Step by step. We need to make sure the DXY doesn't break above this purple zone. That would be disastrous. Hopefully things will calm down there, they'll find a solution, the oil price will drop, and with it the DXY. And of course it's clear, Johanna, that we, Wednesday and the FMC meeting also had a massive impact. The moment there's talk of an interest rate hike, long-term interest rates, the ones in the bond market are incredibly high. Yes. Of course, that means the $2 will also strengthen. So yeah, we actually need an interest rate cut that would help bring the whole thing down again, or, you know, an inversion of the bond yields, but none of that is in sight.
Kevin Wash seems to see things a little differently. Well, we'll know more by tomorrow evening at the latest. Maybe he'll be a little more willing to talk or share information when it comes to the press conference afterward. We're looking at Bitcoin on the daily chart, and you've already mentioned in the chat and also said in last week's interview that the remaining 50% you want to invest in crypto isn't in yet. But when are you going to start the sales campaign? After all, the floor should be in place and fully finished by now.
Yeah, that depends on how you define the term bottom formation at the end of the day. If you go ahead and say the low point in this bearish trend since October 6th, when the price was 126, has been reached, then I'd say there's a high probability, over 90%, that we've seen the low point. That would essentially be this major bottoming process. In the analysis from today, Tuesday, July 28th, we had said last Tuesday that it would be great if Bitcoin moved towards 66,000, tested the resistance around 66,000, and even broke above it. That's exactly what it did. It hit just under 67,000. And then I said it would be good, since it had gained 9,000 US dollars from the low to that high, if it were to do a back test of the old support levels. And that would be, for example, this blue line. This blue line is around 61 or 62,000 US dollars. In my opinion, he could follow this approach in the context of this back test. After it moves upward, the red line in the back test here down to this blue line. Or, for all I care, call it a correction, it goes. That's certainly possible. And in my opinion, if it enters this range, that would be a good foundation for the subsequent rise. And to answer your question, I personally view this overall as an accumulation phase. So the really big players, the true pros, are the ones who say, okay, this is a classic accumulation phase. This is where we jump in, as we'll see in a moment. Of course, I've tried to take a slightly more nuanced approach with the remaining funds I have. And nevertheless, we're in this accumulation phase. And I think, this is just my personal opinion, we're at the lower end of the range. We're still close to the cliff where we could take a nosedive. And I think many people are still afraid of such a crash. And I can well imagine that if Bitcoin now drops from 65 to 64 to 63 to 62, maybe to 61, some people will go and say, I'd better lose my nerve now. I'd better get out now, because the whole thing is going to keep falling. 40,000 US dollars. That's quite possible. So I think what happens in the coming days, that is this move down toward the blue line, is a nice bear trap. They're going to catch a few more bears before heading up. We now have a total of, and I'll say this again because we're keeping track, 173 days of consolidation from here based on that concept. And we have 54 days from here to here, that is in this range. We've been moving sideways for quite a while now. Personally, I believe that the breakdown I've always been talking about has occurred. It went down here, then back up, and then really plummeted again. And that was the breakdown, as it turns out in hindsight. And now we're moving sideways within the uptrend. And in my view, that essentially means the bottom has finally been established in this range.
Well, given this time frame with 173 days of consolidation and 54 days now in this range, it's understandable that some people might say, that's enough for me now, I can't take it anymore, my nerves are on edge, so I'm hitting the sell button. And how you can actually assess this accumulation phase, this bottoming out phase, can of course also be seen in who's taking what positions, what are the big investors doing, who's losing their nerve, and who's profiting from it. We had
Exactly, that's the point, Johanna. Who's losing their cool?
We've talked about this before, or you've posted about it on our channel, and to some extent you can certainly understand that to a certain degree. We've also gotten quite a few comments. We'll come back to this briefly at the end of the show to discuss how to handle situations like this and what to focus on. But of course, it's also somewhat understandable when people say, this is getting too risky for me. Before my portfolio goes even deeper into the red, I'd better at least secure, as the saying goes, a bird in the hand is worth two in the bush.
I'll cover the losses.
Should I secure the... Yeah, sure, because once it's out, you can't get it back in. The adults think a little differently about that. What's the situation here, and what makes this foundational phase particularly significant these days?
Yes, we have two charts here from River. You can do that. They posted it on X. We saw this earlier this year. Back then, I pointed out that the price of Bitcoin had fluctuated 25 times over the course of the year. And you can also see that even though Bitcoin was on an upward trend from January through October of that year, many individual investors sold their holdings. It was primarily companies that made the purchases. But even last year, governments were buying these treasuries.
Yes.
Have emerged, have formed, some of which have now gained a lot of clout and are even voting out their C-level CEOs. Well, from that perspective, you can really see how things have changed. We discussed that at the beginning of the year. Now there's a new presentation, specifically Q2, unlike year 25, which saw more or less continuous growth. Q2 was actually a relatively negative year, or rather quarter, as we just saw. And here you can see that these guys have already completely pulled out. They didn't buy much more after that. Governments also sold off assets, and private individuals more or less sold off everything to the companies that took advantage of this phase of accumulation to buy up assets. And that's how it works. That's why the headline is right. The pros buy Bitcoin at every stage, when the price is rising and when Bitcoin is available at a low price. So for anyone wondering, yeah, I absolutely have to sell my Bitcoins now before the price drops even further. There are plenty of people on the buying side who are just waiting for a good price.
What surprises me right now is that governments are also pulling out and selling off their holdings. You'd actually think they'd take advantage of this bottoming out phase or this accumulation phase. Or do you think this might be related, for example, in the case of the US government with the Clarity Act still up in the air, to the fact that they don't know whether they're allowed to or not?
Well, okay, the US government has decided not to buy anything. They confiscate them, seize them, whatever you want to call it. They don't want to buy them, not for now anyway. Other governments have made purchases, and of course you need money to make those purchases. Yeah, well, you can see here too that 2,000, well, that's not exactly a huge number. So you can't say that the governments in Q2 just sat on their hands and did nothing.
Next, let's take a look at Bitcoin on the weekly chart. Last week we talked about how overall, of course, the weekly chart simply provides a clearer picture when you want to put the whole thing into context. We'd had 4 consecutive weeks of gains, and so we always look at how that might affect indicators like the MACD or the RSI. 4 positive weeks in a row, even though there are certainly some uncertainties right now. But looking at the weekly chart, and I'd like to come back to this in a moment, do you see after these 4 green weeks any potential for this trend to continue?
Well, okay, on a weekly chart, a new candle always appears. That's not much. And as you already mentioned, we've had 4 green weeks in a row here. And on the far right, you can see the red candle. That marks the start of this week. I hope that we'll enter this backtest as just described in the daily chart, which shows Bitcoin falling to 62,000 and 61,000 US dollars, so that we'll have the opportunity to re-enter the market there before it starts moving back up. And in that regard, I'm assuming, since this backtest process, this correction will take a few days, that we'll likely see this happen this week, provided nothing unusual happens at the FOMC meeting. Depending on what happens with interest rates, we'll probably see a week in the red. Well, after 4 greens, that's actually pretty okay too. Basically though, not much has changed in the big picture. So looking at the MACD, we now have a second, albeit small, green candle. So in the short term, you could say the situation is positive, even though the 2 lines, the MACD line and the signal line, are still below the 0 line, which is negative in the long term. And we've already mentioned this countless times. The bullish divergence in the short term, where Bitcoin prices are falling while relative strength is increasing, which is a positive sign, something we've seen before in a similar pattern. And last week we also compared this point here with that point, and I'd say these 3, 4, 5, 6 weeks during which nothing much is actually happening fit perfectly with those weeks as well. And I can definitely imagine that if the Clarity Act is passed next Monday, we might just see a candle like that, 10, 15, 20%, that could send the price skyrocketing. A correction this week, a backtest this week, and next Monday the Clarity Act will be passed and things will start moving upwards. So in that sense, we're really in the thick of things right now. You said it's summer and usually not much happens then, but right now there's actually quite a lot going on.
Why do you assume that the Clarity Act might be passed next Monday? If you take a look at Calci and Polymarket, they've pretty much written it off, and of course the time or the window before the Clarity Act can be submitted is getting narrower and narrower. I mean, it's next Friday, August 7th. Why do you think, or why do you hope that Monday will be the decisive day?
Yes, there are apparently rumors that it's supposed to be passed or at least put to a vote on the Senate floor next Monday. Whether it gets passed depends on whether they can get 60 votes. The Republicans have 53, so they need 7. So that means they have to convince 7 Democrats that the Clarity Act is a really important issue. I hope they can pull it off. The document is almost finalized. We're talking about 616 A4 pages that have been written, and right now it really just hinges on a single issue. That's the ethics component. We've discussed this at length, especially in connection with the Trump family and the fact that they made 1.4 billion from cryptocurrencies last year, which some people don't think is so great. So from that perspective, that's where things stand now. The White House, as we reported last week, has made a proposal on how to address this. That proposal has been incorporated, and this document has now been made available to everyone. It's not on the Senate's schedule for this week yet, but as I've said several times, there's a rumor that it might be next Monday. People say, well, just go ahead and do it and assume it'll work out somehow, because you don't really have much of a chance anyway. They'll use this time to convince as many Democrats as possible that this is a good thing. And right now, asset managers are also backing that. We know, of course, that the big banks see the Clarity Act as something that poses a major competitive threat to them.
A threat, sure.
What kind of competition could cryptocurrencies pose to them if all of this is legalized and made legitimate? But asset managers, of course, support the Clarity Act. They want clarity for their clients too. Goldman Sachs, Fidelity, Charles Schwab, those are the really big players who say, we have to have this, we need this. They're pushing it really hard. You said the odds are against it. I think it's at 30% on Polymarket right now. Personally, I still think it's feasible. So if the Republicans are united with 53 votes, then, as I said, we only need 7 Democrats. And I can well imagine that there are some Democrats who say, if we don't want to lose the competition against the Chinese, against the Europeans, I've told you, the Japanese are in the mix, the Russians are in the mix, it's happening everywhere. And we don't want to wait until who knows how many years from now when the Clarity Act might finally be decided. And above all, if we don't want to disappoint our voters. There are, after all, 60 or 70 million Americans who own cryptocurrencies, and of course they want a Clarity Act. Of course they want to see Bitcoin rise by 10, 15 or 20% in conjunction with the passage of the Clarity Act. If they don't want to disappoint them and if they want to get re-elected, then it might be better for them to vote accordingly. In the US, they make it pretty clear which Democrats are in favor of it right now and which ones are against it. And yeah, in my opinion, they'll get what's coming to them. So the Clarity Act is, in my view, an absolute must for the scene in the US. And we might have an answer by next week, which would actually fit very well into our schedule here.
Malicious tongues might claim that now we know which Democrat to bribe to get those 7 votes. But why are you leaving, or why is Monday coming up so fast? Does that mean, conversely, that the 7th August is actually irrelevant if it's Monday, if nothing happens on Monday, or could something still happen?
No, the rumor was started by the CPO of Coinbase, who said in an interview yesterday or the day before yesterday that he had apparently spoken with a high-ranking government official who told him they would be doing everything in their power to bring the Clarity Act to the Senate floor next Monday. And that's basically the basis of this rumor. It doesn't matter at all whether it's Monday or Tuesday. The important thing is that it's next week. Donald Trump has already said he won't let the senators and members of Congress go on recess until certain matters have been resolved. We'll see if he can get this idea through. But Joanna, the main topic on all platforms last week was the Clarity Act. It was all about the Clarity Act. If he comes, we'll see a real surge. If he doesn't, then we'll certainly see a small dip, but it won't be anything compared to the surge because, as you said, many people praise him. We haven't factored it into the price yet. That upward push.
I'm actually kind of glad that Donald Trump doesn't have to approve my vacation. Let's take another look at the altcoins. We spoke very positively about Ethereum last week. Well, it did perform well, of course, especially when it came to the resistance level at $1,250. Now we've seen a pullback here, but it hasn't yet fallen below. Has $1,350 become a support level by now?
We'll see. So basically, ETH is performing really well. As we keep saying, that's important. It's the second largest cryptocurrency, and we had 1,850 as resistance and said we were still down here. Well, if we want to talk about an upward trend, then it has to go above that. That's the minimum goal for now. And it has reached that minimum target. Then we said that once it breaks above that level, it would also do a back test here to test that resistance level as support. It has now done that twice. It might even do it a third time. It might also dip below that again if Bitcoin rises to $61,000 during its correction. But the moment Bitcoin starts to rise, it would naturally start to rise as well. And in my opinion, that rise would be massive. And we can already start focusing on the next resistance level he has to break through. That's 2,433. Basically, it's this range. And if it breaks above that level, then you could definitely say that it has formed a higher high relative to this one. And then you could say, yes, an uptrend is slowly taking shape. So from that perspective, things are looking really great right now. The MACD is positive. Here too, you can see how the relative strength is increasing. The resistance has been broken, the backtest is in. Actually, everything is just wonderful.
For one, it's wonderful. For the other, it's still a bit of a cause for complaint or lament. In terms of performance, XRP is still a little ways off from the next resistance level it needs to break through.
Yes, that's right. That's just the way it is, unfortunately. Man, you can really see the analogy here. That was the $1,850 on ETH.
Yes.
That's 129 for XRP. So he hasn't even come close to making an attempt to go in that direction. On the contrary, I just drew the wedge because it was so obvious. It broke out of the wedge on the downside. And given how XRP feels right now, I get the sense that there are still an unexpectedly large number of XRP holders who are saying, oh, come on, I bought this thing at 30, 35, 40 US cents. Before it drops any further, I'd rather sell. That means we're seeing exactly that kind of movement. You just have to always be aware of that. A downward move happens precisely when there are still some nervous investors who say, I'd rather sell when there are more sellers than buyers. And that's the impression I have right now with XRP. We're just shy of the US dollar. Some people still want to sell above that US dollar. We're at 1.05, I think, right now. And they just want to sell above that $1 US. The moment it drops below $1 US, there'll probably be a few more stop loss orders that get triggered. So unfortunately, I just can't shake the feeling that, or I can't help but feel that we'll probably get this support from 93, 94, 95.
Try it again.
We'll probably see the US dollar dip again before it starts to rise, and that might happen now in conjunction with Bitcoin's correction down to 61. And as for the 50% I still have left to invest, I expect to allocate the bulk of the money to XRP, if we go in that direction, in a proportion that's greater than that of XLM and Canton.
That doesn't sound like a very bright outlook.
Yeah, but it'll go back up after that, Fiona.
To put a slightly more positive spin on things, let's talk about the inflows and outflows in spot ETFs. Things were looking pretty good there.
Yeah, things were looking good. So XRP at 815 million, that's great. Solana at 7.2, Ethereum at 103, the same as last week. Last week they had 105 million. And Bitcoin is at a homeopathic level of 33 million. That wasn't really anything. He's now had 3 days, 3 red days in a row, 3 very red days in a row. Still, last week was somewhat positive. I'm assuming that shoppers are slowly starting to come back now. Accumulation phase. That usually doesn't work through the stock exchanges either. Sometimes it can be done over the counter, OTC. And that's why you can't see everything from this vantage point. Man, at the end of the day, you're always surprised when you realize, wait, I didn't see anything. where were the big sales? We always show the sales figures after all. The really big players just buy OTC. That's just the way it is, and you don't see that on the stock exchanges. You don't see the trading volumes.
Why do they do that? So the fluctuations aren't so big?
Well, the moment there isn't a large supply on the stock exchange and they want to buy in larger quantities, they push the price up. So they place the order with a market maker. Please accumulate without the price going up over the next 3 weeks, so many thousand coins, and I'll pay the resulting average price. And then you just don't see any of that. That's just the problem. You can see that especially when the OTC desks are empty, when there are no.
But you can still look at them, can't you?
No, not necessarily. If a market maker doesn't disclose what they have. Well, we also work with Tokentus and market makers when we buy our coins. So then I ask, how many coins can I get and at what price? And then he makes me an offer without anyone else being able to see it.
Okay.
And that way they can acquire these coins at certain prices without driving the price up. Yeah, if that's the whole point of this whole story.
But of course, you can still see what major investors have in their portfolios when they disclose that information, right?
Yeah, well, you can see the inflows at the end of the day. Yeah. But where did they get that from? I mean, the price is determined on the stock exchange. The moment they don't go through the stock exchange, the price doesn't change. And I'm assuming that I think BlackRock has made a lot of money off of JP Morgan, and in my opinion, JP Morgan had already been buying Bitcoin on a massive scale months earlier, so that when BlackRock's clients start buying, they can pass along to them the Bitcoin they'd purchased at a bargain price months in advance. And that's how it works at the end of the day. After all, that's ultimately part of what market makers do, buying up certain amounts of a certain coin at a certain low price when they're driving the price down, and then saying, okay, I've got this much, who wants it? And then they sell them at a higher price without going through the exchanges and without driving up the price on the exchanges. And in my opinion, that's also one of the reasons why XRP isn't performing well right now. As for XRP, I bought all of my XRP OTC, at least from Tokentus. Those weren't traded on the stock exchange.
I'm curious to see how things will play out, whether XRP will really drop back down to under $1. In any case, we'll of course find out then how you've positioned your remaining 50%. We've noticed, or rather, we're well aware, of course, of just how disheartening this market situation is, how much patience the whole thing requires, and we see that both on Crypto Insights, our channel, and in the comments under the YouTube video. I mentioned this earlier, and it's partly understandable, of course, when you see the red numbers getting bigger and bigger, that you find yourself thinking, man, I was just wrong about this, I want to get out now. How do you deal with this situation? What 3 things do you remind yourself of or keep in mind so that, well, it doesn't get you down so much?
To be fair, I have to say that I feel the same way emotionally. I feel exactly the same as any ordinary investor. Even despite the fact that I'm focusing on this very intensely, I still have these feelings time and again, which I'd like to talk about very briefly now. Even though it's very hard these days, I can really only advise everyone, stick with it and don't sell. We're in the process of bottoming out. Maybe it'll go down a little more, down to 62, 61. So what? But essentially the bottoming out process is complete. We're now in the accumulation phase, and worse than what we've seen in this downtrend since last October. Much worse, Johanna. I don't think it can get any worse in my view. So I can only advise everyone who owns coins to stick with them and not sell any. The bottoming process is, in my view, my personal opinion, largely complete, and the uptrend is definitely on the horizon. The pros, of course, are always on the lookout for sellers of cheap coins. And that's exactly what our retail investors are. They go in saying, I've stuck it out through the whole decline, and then once they hit rock bottom, they lose their nerve and say, okay, now I'm going to sell after all before it drops any further. It's exactly this fear-mongering on the way down that drives coin prices lower, which is exactly what the pros with deep pockets are just waiting for. And you shouldn't offer them the coins you own at a bargain price, because then they'll rub their hands together and buy up the whole lot. That's it. That's the first thing I want to share. We're at the bottom. Let's stay there and not lose our cool. The second thing I also noticed in the comments, and as you already mentioned on our channel with the questions people ask, well, it wasn't sold here, and just like we saw with Bitcoin, the price is going up to $8,000 or $9,000 per Bitcoin. Then you slowly start to take a deep breath and say, yeah, I made it through. And then there's a week like the week since last Tuesday, when things have just been going downhill ever since, and there are a lot of people who at this point immediately crumble again, break down and lose their nerve all over again. That's why, of course, everyone wants the direct and quick path to the top, but it doesn't exist. I always say there's no straight line down and there's no straight line up. The movement always takes place in waves. That's why we have Elliott wave 1, 2, 3, 4, 5, or ABC. And it's always these zigzag movements. Right now we're just seeing a downward move. That's healthy. It lays a good foundation for the next upward move. And at this point, if there's a correction, a pullback, or a back test, whatever you want to call it, on the way up, you shouldn't immediately lose heart and say, oh, so it wasn't going to work after all, but rather stick with it. And last but not least, I'd like to, even though it's kind of irrelevant now, but the CC posted on X, and this was the entire post. For long-term holding, when is the best entry point? So when is the best time to get in if you want to buy and hold for the long term? Is it during a bull market or during a bear market? Anyone here with weak nerves will answer this question automatically. They'll say, of course, during a bear market, when prices are low, when prices are tumbling, when blood is flowing in the streets, that's when you have to jump in, that's when you have to buy. Yeah, but then you actually have to do it. That, in my opinion, is the crux of the matter, and that's my credo. And to wrap up, Johanna, if I haven't already managed to get our viewers out of the Bitcoin market at 126,000 on October 6th in the sense of selling, and to help them, those who are sitting on the sidelines with cash during this bear market phase, with cash on the sidelines, then I'd at least like to try to make sure that our viewers don't bail out now during this hot phase and stick with it, so they can keep their chance to not only make up for everything during the next bull phase, but also to top it off. And that top it off, that's going to be substantial.
A word of advice for crypto investors. Sure, we've of course seen it, and it's understandable that there's been this zigzag movement. I've seen the comments too, and yet another correction, and yet another, and yet another.
Von der Korrektur.
Exactly. Sure, that can be really disheartening, but we're excited to see what happens. I'm especially looking forward to next Monday. Can you even make it through a week of interviews without me? Or can you even make it through a week without an interview and without me?
We're on the channel together every day, and that helps me get over it.
Well, then I'll say thank you for today. We're taking a break, and I'd like to emphasize that this is a shared break, meaning not just together, but into a summer break, one that isn't just my summer break, but a chance for everyone to catch their breath. And we'll keep an eye on the market and all developments, and hopefully positive decisions will be made soon, whether it's regarding the Middle East, the Clarity Act, or and we'll be back here for our viewers in 2 weeks at the very latest. Thank you very much, Oliver, for your analysis. And dear viewers, I hope you too have a relaxing 2 weeks. We'll keep you updated on everything and report back in 2 weeks.